Yes.
Yes, it is.
It's gonna be a good
live. We got our peoples in the building, 2 Cuzzos in the building with us. About to give us some basic crypto knowledge, not super in-depth. We're gonna have more presentations for y'all in the future to touch on specifics. This is to give like a broad overview. It's another supplemental Sunday, so if y'all haven't been here before, basically what this is, we know Mark and Jolene do their thing on Tuesdays and Thursdays, giving us all the game and the knowledge that they got, usually on like a more current topic. And with the supplemental Sundays, we just going back and filling in some of them gaps in detail for all areas of investing. So we did earnings reports, we did financial reports. We broke both of those down. So if you haven't seen those videos and you struggling going through a 10K, or you struggling reading a balance sheet, we got you covered. Go watch the past 2 weeks. We got you covered for sure. Today we doing crypto. We got my guy Joel, we got my guy James. Y'all probably haven't seen them before, but they definitely know their stuff. I vouch for them. They know their stuff. Joel has given me all types of game on crypto and just my DMs. I was like, bro, we gotta, I know you giving me game, but we gotta do something else about this. And James, I done seen his work. He sent me a couple of things, you go by Oliver, bro?
It's whatever.
Okay, because I know your tags.
Yeah, go ahead.
No, I know your tags say Oliver. I don't want to be, on the YouTube calling you your government and you go by something else.
James is cool.
All right, bet. All right. But yeah, we gonna go ahead and get started, man. I'm gonna let y'all share y'all presentation. We gonna get right to it.
Thank you.
Up. Are we good to go?
Yes, sir.
All right. The Crypto Come Up, presented by myself, Joel Dennis, and James Oliver III. So today we'll be going over the basics of blockchain, Bitcoin, Ethereum, a little bit about Web3 and DeFi. We'll touch on the decentralized exchanges, wallets, safety, and a little bit of tools. We'll brush over the Metaverse, gaming, and NFTs. And James will discuss a little about taxes. And we have some homework for you guys in the resource section. A little bit disclaimer. Nothing here is financial advice, so please do your own research. So blockchain, what is blockchain? The blockchain is an incorruptible digital ledger of economic transactions that can be programmed to record not just financial transactions, but virtually everything of value. So blockchain has application in almost every industry out there. For example, medical, law, education. So the blockchain network lives in a state of consensus. The network reconciles every transaction that happens in 10-minute intervals. Each group of these transactions is referred to as a block, and a network of so-called computing nodes make up the blockchain. We can say that blockchain is like a software solution for reaching agreements within a leaderless group of peers that show that events have occurred. And each event is recorded in an uncorruptible historical list, with each peer having a copy. So for example, over here, we have an example of what it might look like. So let's say you put in a transaction, a request for a transaction, it goes over and it creates a block. This is sent over to the network of peers, they verify it, and it's added to a permanent historical list. It can't be changed, and your transaction is complete. This happens in seconds. These digital ledgers are a new way of just keeping record. It allows you to do a lot of things because of the different unique properties. For example, it's programmable. And one of the most famous blocks out there is Bitcoin. And I'll let James explain a little bit more about this.
So Bitcoin is a digital cryptocurrency. It's secured by a decentralized computer network in order to create a peer-to-peer electronic cash system. What makes it so special is that it has a limited and predefined total of 21 million Bitcoin. to be mined through February of 2140. Every 4 years, the amount of Bitcoin mined per block, that reward given to the miners is cut in half. That event is called the halvening. That is a very popular event. It normally causes a supply shock issue. It just recently happened. When we deal with Bitcoin, we like to go back. All right, step right there. Bitcoin case. We like to examine this under 3 lenses: the store of value, the unit of accounting, and medium of exchange. And I like to address on those separately. Next slide. So on a store of value, most people like to compare Bitcoin to the precious metals market, mainly because they have a limited supply of precious metals, a certain amount that we can have, and the amount of energy and cost to mine those precious metals helps to determine the price. And Bitcoin is viewed as kind of like the digital version of those precious metals. But Bitcoin also has an algorithmic fiscal policy. So it has a set inflation rate that will change over time. But again, it's set algorithmically, so you don't have people controlling this issue. This is set by the computer, and that can't be changed unless there's a consensus by the entire block. So that's as a store of value. This is important to people in all over the world. Countries that are experiencing hyperinflation, for instance, this is how the people run and find safe haven to save some of the value in their currency. We haven't experienced that yet here in America. We are experiencing a 6.8% inflation rate, which is the highest in 40 years. So inflation is a concern for us, and some people view Bitcoin store of value proposition as a way to kind of hide from some of that. But then we move into Bitcoin as a medium of exchange. Again, all over the world, everyone doesn't have access to the traditional financial banking system. So Bitcoin is a way to bank the unbanked because it only requires access to a mobile device. In addition to that, we know about people who send money back home. And currently right now, those mediums of exchange go through like Western Union or MoneyGram. The fees to make those transfers are extremely high. Also can take a amount of time, 7-10 days, depending on the amount that you're trying to transfer. And if it gets too high in the amount, you also have additional paperwork that you have to fill out. Bitcoin kind of minimizes all of the ropes and jumps and hoops that you have to go through to get those transfers done. It reduces the transfer fees, and it's almost instantaneous to send those money back to Bitcoin peer-to-peer. In addition to that, another medium exchange use case for Bitcoin is in the internet space. So as we move into the Internet of Things and more automation, Tesla starts the robo-taxi service. These devices have to be able to exchange currency some way. The traditional finance system is not very useful to the digital age. So we're going to have to transition. Bitcoin helps to fix that as well as a medium exchange. And the last is the unit of accounting. This is probably going to be the biggest obstacle and the hardest hurdle for Bitcoin to cross. Currently, we just don't have enough guidance and regulation in place to assist that and help accelerate that. It's difficult for companies, even the ones who have Bitcoin on their balance sheet, to use Bitcoin as a unit of accounting, partly due to the volatility, but mostly due to the accounting rules and how Bitcoin is being viewed right now by the SEC and the CFTC. By it not being a currency and not recognized as such, it makes it using as a unit of accounting very difficult. But as we move to the Bitcoin standard in the future, people believe that Bitcoin could possibly become the world reserve currency. And then we move to a standard where everything is priced in Satoshis, which is the smaller unit measure of Bitcoin. It's the cents to the dollar, so to speak. And if we ever to get there, then the unit of accounting would be a lot easier for everybody. And then it takes the political power away that the petrodollar or the USD has as the world currency currently. So that is definitely a concern of the United States, as it could cause some political issues. Next slide.
So I'll go over smart contracts. So smart contracts, they can be used to create smart properties or tokenized assets that people can invest in. For example, the ERC20 token is a standard used for creating and issuing smart contracts on the Ethereum blockchain. And a tokenized standard, it's just a set of rules that govern the mechanism to create, issue, and deploy new tokens on a specific blockchain. So two of the most common blockchain-based assets are cryptocurrencies and tokens. The biggest difference between these two is that cryptocurrencies have their own blockchains, whereas crypto tokens are built on existing blockchains. For example, Ethereum blockchain has tokens like DAI and Chainlink. Binance Smart Chain blockchain has tokens like BUSD, WBNB, and Cake. And another famous blockchain, Ethereum, just like Bitcoin, is a decentralized platform that establishes a peer-to-peer network that securely executes and verifies application code called the smart contracts. And anyone can participate in a smart contract. You don't need a centralized authority. You just need your app or your browser extension. And Ethereum offers an extremely flexible platform to build decentralized apps on because it uses the Solidity script language and the Ethereum virtual machine. Now, while Ethereum is very popular and a lot of the platforms are being developed on it, especially in the DeFi and NFT space, there's some up and coming competition that's worth paying attention to, like Solana, Cardano, Avalanche, Polkadot, to name a few. I'm gonna let James cover stablecoins and exchange coins for you guys.
So, the cryptocurrency space has stablecoins. A stablecoin is a class of cryptocurrencies that attempts to offer some price stability and are normally backed by a reserve asset. These coins are used to settle transactions and are a way to stay in the cryptocurrency space, but kind of hide from some of the volatility in the space. These coins can also serve as a store of value, a medium of exchange, or a unit of accounting, and can often find that you can earn higher interest rates in the stablecoin market in cryptocurrency than you would at a traditional finance. So you can maintain your liquidity while earning some interest instead of sticking it in a Chase account and getting 0%. And here are some examples: USDC, USDT. USDC's coin is issued by Coinbase. GUSD is Gemini's coin. BUSD is Binance. And then USDT is Tether. Not all stable coins are equal, so do your due diligence, do your research, figure out who you trust. Remember that these assets are supposed to be backed by a reserve asset, but the auditing on some of these stable coins is questionable at this point. So just do your research and find out where you feel comfortable. Exchange coins are a little bit different. Those exchange coins allow benefits for using the exchange, sometimes lower fees. Sometimes you're able to stake coins and earn interest. Some examples of that are KuCoin, CRO, which is Crypto.com's coin, BNB, which is Binance coin, and FTT. Last, I want to talk about the Oracle coins. An Oracle is a way for the blockchain or a smart contract to interact with external data. So this is extremely important for the settlement of smart contracts that require reliable information from the outside world. The best example I could give you is a betting platform where you would maybe bet on the end of a sports event or how many votes a presidential candidate got in an election. You would enter that bet on a smart contract. The smart contract would need to verify the results from the outside world. The Oracle coins would link the reliable information from the internet to the blockchain so that the smart contract could settle. So some popular ones right now are Chainlink, Augur, and Band Protocol.
All right. So we all heard about Web3 and DeFi, and let's talk about Web2 versus Web3. Web2 is what we are using right now, right? And Web1 used to be AOL and dial-up and stuff like Netscape and MSN. Maybe some of us are too young to experience that. But Web3 refers to the decentralized apps that run in the blockchain. And these apps allow anyone to participate without monetizing their data. So Web3 will most definitely generate tremendous societal changes, with artificial intelligence disrupting the labor markets, and edge computing will literally put the power of supercomputers at our fingertips. Only time will tell how these things evolve. And the three main driving factors of Web3 are AI-driven services, decentralized architecture and edge computing infrastructure. So that's something to look out for in the future. If we look at the structure of Web3 versus Web2, we can see that most Web2 platforms are closed and Web3 is interconnected like a web. So data will be used to drive decision-making, but not be used to stomp on consumers. Your data will be monetized by yourself, and you will have the option to pick. So let's look at an example of how a Web2 company and a Web3 company might run. With Web3, any type of incentive can be tokenized. So the users will be the founders and investors. Users will govern where the company goes. Users will drive the marketing, and the risk of being deplatformed is also minimized. C5 versus DeFi, which is centralized finance versus decentralized finance. So centralized finance, when we think about it, we're talking about what we're currently using, which is our traditional banking system. With decentralized finance, it removes a couple layer of transactions. So Sarah over here, she wants to get money over to Robert. She can just log onto the blockchain and get it over to him with minimal fees without having to go through institutions that take a cut. And what allows us to do this is the fact that DeFi it's transparent, it's programmable, it's permissionless, it's self-governing. We're going to talk about decentralized exchanges, wallets, safety, and leave you with some tools, and let James take that.
So we everyone, for the onboarding process, you have to get on an exchange that allow you to purchase cryptocurrency. The most popular exchanges right now, Coinbase Pro, if you want to pay less fees and have access to setting limit orders instead of just market orders. Binance, FTX, Gemini, KuCoin, Binance. These are still considered to be centralized exchanges. And then the crypto space offers now decentralized exchanges as well. Those are listed at the bottom: Uniswap, SushiSwap, 1inch, QuickSwap. Most of these require the use of a web wallet such as MetaMask, which is a customizable browser extension. And you need those in order to operate on the decentralized exchange. The difference mainly being the KYC process. On your regular exchanges, they'll allow you to connect your bank account. So now you have an on-ramp from traditional finance into the crypto space. So now you connected your bank account to Coinbase. You load the money on the Coinbase, and then you would make your investments no different than you would in your brokerage account, for instance. The decentralized exchanges, you're not onboarding fiat. You're going to be sending cryptocurrency to those exchanges. So you may need to purchase your cryptocurrency at some of these other exchanges. Most of these decentralized exchanges are not accepting credit cards or connecting your bank account. You're using MetaMask wallets. You're using your digital wallets in order to interact with these exchanges. Let's talk about some wallets. So we've already talked about the exchanges that you can purchase the cryptocurrency on. They all offer you a wallet as part of their platform, so that once you purchase the cryptocurrency, you have a place to hold it. So all of your exchanges like Coinbase and Gemini and BlockFi, FTX, they all have a wallet as part of their platform. So you don't have to move your cryptocurrency, but it would be my suggestion that it's not the safest place to keep it. If you do decide to keep your money on one of these exchange wallets, please make sure you take advantage of all the security available to you by the platform. Use your 2FA codes. Try to create a separate password just for your cryptocurrency. Don't use the same password you use for other email accounts or your Facebook page. Passwords that you've given out to ex-boyfriends or girlfriends, or just we want new email addresses. We want new passwords just for crypto, and we want to take advantage of the 2FA code and security measures that they offer. That'd be the safest way to use the exchange platforms. Again, my recommendation would be to get you a hardware wallet. Most popular being Ledger Nano. They have a bunch of different models at this point. Some digital screens. I mean, it depends on how deep you are in the crypto and how many different types of wallets you need. You can go with the cheapest version if you're just into like the Bitcoin, Ethereum stuff. If you're all into the altcoins and you're playing around on decentralized finance space, then you probably need a more expensive ledger. Again, be very careful when it comes to using your hardware wallet. Don't ever type your passphrases in an email to send it to yourself for security, because that's the most unsecure way to save your stuff. Go analog when it comes to writing down your passphrase. Use pen and paper, save it in a place separate from the device, and keep it safe. Back up for me one time, Joel. And some hardware wallets, again, Ledger Nano is what I use. I also use a Keep Key, but Trezor is great. SafePal is also good. If you use a software wallet, it could be safer than just leaving your money on the exchange. So the most popular in my recommendation would be Exodus. Again, this is something you download onto your computer. It creates a separate wallet where you can still remove your money from the exchanges, just in case that exchange gets hacked, the exchange goes down, the exchange gets involved in some type of litigation, so they freeze your funds. You'll still have your private keys. They'll just be moved from the exchange onto your software wallet. It's not as safe as a hardware wallet, because again, your software wallet is still connected to the internet. If you go log in at the coffee shop, it could be vulnerable. Use a VPN if possible. Keep yourself safe. Mycelium is also good if you want to use a mobile wallet. So I touched on some of this in safety. The code hardware wallet, the ledger, again, just secure your passwords, secure your passphrase. Don't type that out. Don't text that. People can hack your email address. I personally have been hacked, so I've experienced this. You just have to be super secure and watch what you post online as well. Try to use a secure internet connection. I would not ever log into any type of wallet on a public device. Don't get phished. Nobody is sending you 2 Bitcoins if you send them 1. Your hardware wallet is never going to send you an email about making sure your passphrase is correct. None of that type of stuff. Just be extra careful. Double check, measure 5, 6, 7 times before you cut. I also like to maintain multiple wallets as your stash grows. You don't keep all of the funds on one device in one wallet. Again, you are your own bank in the crypto space. There's no FDIC insurance. Once you take this money off of Coinbase and stick it on these wallets, you're responsible for this. So make sure you put in extra protocols and protect your cash. Secure the bag, because no one is going to be responsible but you. So that then goes into the double check your destination addresses as well. When you send in crypto, I never type out the crypto addresses. I always try to copy and paste or use QR codes, and then I still double check and make sure that those codes lined up. If you send it to the wrong address, you will not get it back. Let's talk about some of these interest earning platforms. I think this is a really cool space. We have a more traditional crypto space in the Celsius network, because that's kind of like a blockchain where they're allowed to earn interest for your crypto holdings. And then you have a more traditional platform like BlockFi and crypto.com. Again, they offer you wallets too now. So you can load your money from wherever you purchase it onto these interest earning platforms, and they will pay you interest for just holding your crypto. These websites also offer credit cards. So it's a traditional Visa card or American Express card. And as you swipe, instead of earning rewards to flights or 5% cash back on groceries, you get to earn your rewards in cryptocurrency. Most of them let you choose what cryptocurrency you accept. I accept Bitcoin on all my purchases through the BlockFi platform. It's been a great way for me to continue to kind of dollar cost average into Bitcoin and accumulate throughout as I just collect these rewards. And then they take the rewards from your credit card spending and put it straight into your interest account, so you continue to earn interest on those rewards as well. And the last thing these platforms allow you to do is borrow against your crypto. And you can use your collateral to borrow fiat, and much like you would a line of credit on a security-based loan. This is great. Anybody familiar with the buy, borrow, die strategy, where you're not having to sell the crypto in order to use some of the capital? You can borrow against this. The money that you borrow is not taxable. It's not, you don't pay taxes on that. You can also write off the interest on those loans. So it works very much the same as it does in the traditional finance market. And these platforms are just starting to pop up where you are allowed to do the same thing with your cryptocurrency holdings. And the difference between those interest earning platforms and staking, which is another way to earn passive income with your crypto, is the lockup period and liquidity. So in most of those interest earning platforms, you can remove your money immediately. You're not subject to locking your coins up for a certain amount of period. Whereas when you stake a coin, sometimes you can't touch those funds for a certain amount of time. So that's important. Also, staking rewards are given to you for securing the blockchain, versus the interest earning account rewards are given to you because you're giving them custody of your crypto. So much like Chase Bank would take your money and then go invest it and then pay you back an interest for holding your money, those interest earning accounts are doing that. The staking rewards are a way for you to secure the network. They need you to participate and be a part of the network, and they reward you for your participation. So those two main differences, but you can make some decent passive income with your cryptocurrency holdings in both of these strategies. Here's some of the tools that you can use to research some of the cryptocurrencies out here. CoinMarketCap and CoinGecko are very similar. It's a great place to start. On CoinMarketCap and CoinGecko, you'll be able to find a white paper for every coin. They'll have a link to the website, so you can do your due diligence on the team and the project. They'll have a link to all the social communities, the Reddit community, the Discord groups, the Telegram groups, so you can keep up with the project, and then also additional information. So if you look at this slide, the top orange arrow is where you can find the website, the white paper link. If you click that community tab, it will pop down any Facebook groups or Discord, Telegram groups you can be a part of. And then if you look at the other orange arrow towards the middle of the screen, all of these are also tabs that you can use to do research. It's going to have links to news articles. If you click wallets, you'll see what digital wallets and hardware wallets support the coin. This is a screenshot of Bitcoin. But as you scroll up and down the screen on this arrow in the middle of the screen, as you scroll up, all of those things will start to pop up on the screen. But you can click the tabs if you're looking for specific information. My favorite tab on this is Market. If you're looking and diving into a coin that's maybe not on Coinbase, if you click Market, you can find out exactly what exchanges hold this coin and the type of liquidity available on that coin on these markets. So if you're trying to find out where to purchase a coin that's not available to you on Gemini or Coinbase, that's how you find that out. And then you can use the wallet to figure out where's a safe place to secure it once you purchase it. And again, that was a screenshot of CoinMarketCap, but you can do very similar stuff on CoinGecko.
All right. So let's move on over to Metaverse, gaming, and NFTs. So oftentimes the Metaverse, gaming, and NFTs are interchangeable across multiple platforms. A gaming NFT can be used in a Metaverse ecosystem where games are built. And some of the largest Metaverse out there are Axie Infinity, Decentraland, the Sandbox, you got Gala. And these are Metaverse ecosystems where inside of them, you have multiple games. And the NFTs for these games can be purchased on one of the most popular websites out there is OpenSea. So we have people that buy these NFTs, they go into the Metaverse games, and sometimes they rent them out. It's important to look at who the team on the project is, who's behind the NFTs. And it's also good to check out which VC firms are backing these projects. And in our resource section, we included a list of VC firms you guys can spy on their portfolio and check out what they're investing on. This helps you filter out the noise and the hype, because you really want to stay away from the hype, especially if something hasn't even been built yet. Here's a projection of global video game players that we expect by 2024 in the Metaverse. We're expecting 3.3 billion. Here's a projection of the forecast for the revenue by 2024. Revenue generated about 218 billion. I'm gonna leave you off with taxes, which is super important. I'll let James handle that.
So please consult a local tax professional. This is not legal advice. It's not tax advice. This is not financial advice. But I want to point out a couple of specifics. Currently, they do ask you when you file your 1040 if you are involved in cryptocurrency. So you must report it if you do. This is something new. I think they added in 2018 on the 1040. So it's a little box at the top. It just says, have you ever, I think, bought, purchased, exchanged? It's a list of things, digital cryptocurrencies, yes or no. If you check yes, then you are required to fill out a form 8949 when you file your taxes. So understanding that is very important for you and your tax professional to understand what events are taxable and what are non-taxable events when it comes to cryptocurrency. So selling crypto for cash, so selling your Bitcoin back to fiat is a taxable event. Trading one digital currency for another, so selling Bitcoin for Ethereum is a taxable event. Selling Bitcoin for USDC is a taxable event. And then using cryptos as a payment method at a merchant. So using your Bitcoin to purchase a Tesla is a taxable event. Other taxable, those things are taxable as property. So in those cases, you'll pay capital gains tax on those. So same rules apply to your securities. If you hold it under a year, short term, if it's over a year, long term, capital gains tax when you do those things. But you can also get taxable events in crypto and some of those passive earnings that we talked about earlier. So mining and staking crypto is a taxable event. If you receive any type of airdrop tokens for free by using these decentralized platforms, something that's not as popular now, but that we dealt with in the past would be like hard forks as well. So if Bitcoin or Ethereum would hard fork it, then you receive another free coin, that's also taxable as income. And then getting paid in crypto is also taxable as income. So that does not fall down on your tax form. It's the same way, but they are taxable events. What's not taxable is transferring like assets to exchanges. So if I send my Ethereum from Coinbase to Exodus, that's not a taxable event. If I give crypto to someone, that's not a taxable event. One thing I want to point out, the difference between cryptocurrency and normal security rules when it comes to taxes is we do not have a wash rule in cryptocurrency. For people who do not know what a wash rule is when you sell a security at a loss, you are not allowed to write those capital gain losses off if you have purchased a similar like security 30 days before or after you made that sale. So you can do that in crypto though. That rule does not exist in cryptocurrency. So you can do some tax loss harvesting at the end of the year or whenever the crypto that you're invested in takes a good dip, if you can, because the wash rule does not exist. And again, please consult your local tax professional. If you're involved in cryptocurrency, do not hide that. Let them know.
Yeah, don't hide. Taxman's always watching.
Yes.
So if you guys have any questions, you can reach out to James or myself. James is on Twitter and Instagram and Facebook. I'm on Instagram. You might have to add me. I have a personal Gmail I created just for the cousins. You guys have any questions, you can reach out. I had started a Discord group a while back where I put my own research and it's just me in there, and you guys can join if you have questions. I'm on there. I can answer for you anytime. And in the resource section, last but not least, we left some homework for you guys. You can check out the crypto basics on CoinMarketCap. A little YouTube video about the history of DeFi and exactly how blockchain works. There's some top Metaverse tokens you can check through, play to earn tokens and projects. There's some safety browser extension here. We got Bitdefender, very well trusted. Cloudflare, you all know where that's from. They have a mobile app as well. It's a free VPN. For portfolio tracking, we got CoinStats. It's pretty cool. You can integrate any platform, any decentralized exchange or your wallet. And Zapper.fi, you just add your wallet address and it tracks all of your holdings. It doesn't have access to your wallet per se. It just sees what's in it. That's also one way the tax man can look at you. We left some IRS articles you guys can check through, and the venture-backed projects you want to look at Andreessen Horowitz, their portfolio. You want to check out Dapper Labs, and the high yield staking platforms are at the bottom here. Any questions? Because of
I didn't see any questions in the chat. If y'all got any questions, make sure y'all drop them. We got a few minutes left. And show these guys some love too, man. They gave us a lot of knowledge, especially if you didn't know anything about crypto. They definitely gave you a cool little crash course, 30-minute crash course, to get like some basic information, and then you could branch off from there.
And like they said, exactly, go back and do your own due diligence, you know.
That's a fact.
Nobody's fighting to advise it for you. Go and do your own homework. Figure out what what you're comfortable investing in. Yeah, and be safe. Like they said, they focused a lot on security. That's really, really important in this space as it's so new. So make sure, you know, you're protecting yourself out here as well.
For sure. A lot of times the confusing part about getting into crypto is like knowing exactly how or what to do. And we go on YouTube and they make us smash the like button and subscribe, which is very annoying. But for the cousins, I'll be recording Loom videos that only you have access to. And I created like dummy accounts that you can all look at. So I'll go by and I'll click and you can see exactly what I'm clicking on and what I'm typing on, exactly where to go on. I want my mom to get into crypto eventually. So it's creating like a beginner Loom videos just for you guys. And it's free as always. This is just my way of doing it. Yeah.
That's fire.
Yeah, you could touch in with James because he knows a lot about the Celsius network and holding your crypto in your Ledger wallet for an APY, which is very smart and safe.
Somebody said, which ledger should we get to store coins such as Mana, etc.? I think y'all had that on there.
Yeah,
I like the X and the S. Those two would be mine. And you can determine once you go on the website. One thing, make sure you order straight from the manufacturer. That is extremely important. Order your ledger from Ledger. Do not get it from eBay or Facebook Marketplace, because if I've previously owned that ledger, I could get the passphrase, rebox it up, resell it. You're thinking you're getting a passphrase for the first time. As soon as you load your funds, I can take it from you. We do not buy third-party hardware wallets. Okay, again, security, right? But yeah, I like the Ledger X and the Ledger S depending on your needs and how often you're going to use it. Mine are pretty much cold storage. I don't trade crypto. I accumulate, I buy. This is a long-term play for me. I have never sold any crypto. So I have my ledger in a safety deposit box. I only access major moves when I need to do stuff. So they have some that's more for like everyday use if you keep it on your keychain. So it depends on like what you're using your crypto for. I recommend if you're doing all of those things, have different wallets for each thing. Have one that you use to spend and have one that you use as a long-term investment savings plan.
Sure. And one thing you want to watch out too for, especially with these airdrops, is sometimes you would see like a free token in your wallet. You don't know where it came from, and you go on the website to check it out to see what it is, and they would ask for permission to get in your wallet. And once you hit accept, it's game over. If you don't know where it's coming from, they're getting in. You want to watch out for that.
Yes.
Definitely. Scammers in this game.
Man, gotta be secure in these streets.
Yeah. I personally, I trade, but I also hold and I do similar strategy like James. If you trade, you want to stay away from the large supply that's out there. For instance, I know a lot of people are on these dog coins, Shiba Inu and whatnot. But if you look at the circulating supply of SHIB, you would need the market cap of Apple, Tesla, and all Amazon just to make SHIB go to $1. So you want to be careful when you're trading those assets.
All right. Somebody said, will certain coins lose value as countries adopt their own coins that they regulate?
That's a good question. Because right now we're in a super gray area. If you watch the recent congressional hearing, you've seen a lot of Congress people raise questions about stablecoins. And there is a stablecoin war going on right now. We got USDC versus USDT. USDT, the controversy for folks who don't know is that USDT is a China-based company, and there's rumors that they had invested a large sum of their assets in Evergrande. And if we've been paying attention to the market, we all know what happened to Evergrande in the past couple of weeks. They've been printing a lot of USDT without it being backed by US dollars. Whereas USDC, it's backed one for one. And during volatility, like the events like Evergrande, depegging can happen where the value of USDT, which was controversial, it would drop to not $1, but it would drop to like 96 cents. And if you were on one of these yield platforms and you were borrowing against your money that you put in, and you had set your leverage to 96%, you would have been liquidated, which means you lose all your money. So you got to watch out for that. That's something very important.
I think that question was more related to the central bank digital currencies that are starting to come out. And then when it comes to that, I mean, that's a political conversation, right? And a question of fiscal policy for me. I feel like the central bank digital currencies, if there is ever a Fed coin from the United States, it would still be ran under the same fiscal policy and control that they have over the US dollar. It would just be a digital version. So my question would be, if you were in Bitcoin as an inflation hedge and then they drop this coin, are you safe from inflation in that coin, or are you still in Bitcoin for an inflation hedge, right? So if the people are using Bitcoin as a medium of exchange, for instance, and then the country fixes that issue, well, then yeah, there'll be some transition into the native currency because now I no longer need Bitcoin for that reason. But I think the people that are there for the store of value will stay. Again, it's a fiscal issue, right? US dollar inflation 6.8, Bitcoin right now 1.75. Where do you feel comfortable putting your money? And then it'll be a personal choice for everyone, everywhere.
Oh, that's a real war.
Yeah.
It's going to be interesting.
I think it's absolutely positive for the space, though, because as digital currency, as central bank digital currencies come out, all they're really doing is putting digital wallets in the hands of all of their citizens. So once we introduce digital wallets and everybody's moving on a digital system, well, then we'll all get to make an individual decision on our own where we want to put our money. And so the best fiscal policy should win. I personally leaning towards Bitcoin to win that war if that ever comes up, because their system is programmatically, algorithmically secured by the network. It's not determined by people in politics.
Yeah, for sure. And recently, Myanmar and I think there's internal conflict in that country. One of the official government declared USDC their official stablecoin, and the rebellion declared USDT as theirs. And I believe what we might see within the United States is not a creation of like a Fed coin, but an adoption. It'll make it a lot easier for them to transition and convince people that, hey, this is the one. So the things that I'm looking out for is that which one they might want more control of, in a sense. You have any other questions? That was a good question.
One of them was the Celsius accept staking of other coins outside of Bitcoin and Ethereum.
Yeah, Celsius Network has way more coins than just Bitcoin and Ethereum. I would recommend anybody just download the app and check it out. It's very transparent on what coins they accept and the interest rates that they offer. Celsius pays out their interest weekly. And so just check it out. BlockFi they all offer different coins. I don't know how to determine what they feel comfortable taking custody of, but they all offer different coins and different interest rates. I use multiple sites for that reason, to try to take advantage, kind of like a small version of yield farming. Whoever's offering me the best rates can get my business.
All right. And then, I mean, this is kind of like speculation, but they asked, what event do you think will need to occur in order for crypto to have a mainstream use case?
I think it's happening already. The NFT space is taking people by storm. Anybody follow Gary Vee? Anybody follow Travis Scott? A lot of these artists are starting to use the NFT space. We have, when I say artists, I don't mean just painters either, like people. I'm talking, our rappers and our singers. The NFT space is going to digitize value for everything, I believe. So that's going to be one use case. We already use it as a medium of exchange. I think we're spoiled as Americans because most Americans have access to the traditional financial system. We have Cash App and Venmo and PayPal, and we can go to the bank. But outside of this country, everybody doesn't have access to that, and Bitcoin fixes those things. So as that community grows as well, as we start to see that it's just more efficient, I think regulation and guidance is what's required right now. Is what's keeping big institutional money out. It's keeping traditional finance markets out. It's keeping your 401ks and your hedge funds and stuff out. But as that regulation comes out, as that guidance comes out, as they start to be a little bit more favorable and clear on the tax issues, but there's no one. I don't think there's that one event. It's gonna be it's just a growing thing. It's like a snowball coming down a hill. It's just picking up steam. It's adding snow. Snow is going to get bigger and bigger. I don't think it's like one thing. It's not going to be like an announcement from the U.S. government or something that really just blows this thing up. It's just going to come. You're going to see it coming. People paying attention will see it coming. Like the signs are there.
It's already here, man. It's already here. The big institutions and banks, they're hiring for positions in cryptocurrency. If you look, and they are off ramping a lot of funds into the space. And they're trying to back and like pick projects that are going to blow up in the next couple of years, especially for Web3. Big companies out there. I mean, just look at Square, Tesla, all of these companies. They're on board because they know what the future is. And with AI and you have edge computing, Web3 is just going to add to that. So that's what the infrastructure is going to look like. There's an interesting report here in the resources section we left you guys by Ansari.io, and it's kind of like the ARC yearly report. So if you go over here, it's for the thesis for 2022. I do think everyone should take a look at this. This is like, ARC releases their yearly outlook and report. You take a look at this, and the information here, it's very dense, but it gives you a big idea of what is going to come to the space. A lot of people are focused on NFTs and Metaverse and whatnot, but if you're thinking about developing your own company or your own product within the Web3, think about edge computing, think about AI. And, we don't have to be geniuses at programming and such. But if you do know Solidity, hit me up, because I would hire a programmer. Yeah, a lot of these things, once you get used to like using the wallets and stuff, it'll be like second nature. Don't be afraid to dip your toes into Coinbase. Like at least start from there and then work your way down. It's already here, the movement.
Yeah, y'all made some really good points. I'm gonna definitely check that report out. And then even just what you was talking about, James, I never really think about like what other countries and other societies have to go through to move money or to send money or to access money. We are definitely spoiled in all the different types of ways that we could send money from, all those different apps and stuff that you listed. So crypto is definitely something that on a global scale is super, super important. So if you don't have any exposure, use this presentation and some research on your own to make sure you get some exposure there, even if it's not a lot, just a little bit, because it's something that's happening, whether you think it is or not. You feel me? But yeah, did y'all have anything else before we wrap it up? I do want AJ to get her piece in too.
No, man, I just thank y'all for y'all time. Again, please feel free to hit me up if you have any questions. Like Joel, this was my opportunity. I felt to give back to the Come Up Cousins in this community. I've learned a lot from y'all individually and as a group. I've been with the cousins for a minute now. I'm an OG cousin in my opinion. I'm on year 2. So I was just excited to be able to give back. I am more than willing to answer any questions you guys have. I will not do price targets and that type of stuff, but if you have questions about onboarding or security, where to go do some research, anything like that, please feel free to hit me up.
Yeah, and same goes for me as well. If you have any questions, you can reach out to me. I want to thank Tivo for being a mentor to me, whether or not you accepted it. You don't gotta say it. You don't gotta say it. But this is my opportunity to give back. I'm saying it for the rest of us, okay? I'm saying it for the rest of us.
Listen, man, it's the Lord's Day. I'm gonna let you get a hall pass on this one. But I do appreciate y'all, man. James, you came to me, on the post and told me you wanted to do something. So I definitely appreciate you stepping out. Joe, I actually asked you to do it. So I appreciate you, no resistance, ready to work, ready to have a partner, 2 strangers coming together. So definitely appreciate y'all. Make sure y'all show them some love. And they said they open. They put their tags up there. So if y'all got any questions, don't come to me. Come to them. They got the info. You feel me? I don't know everything. I really don't know much. So we not gonna get on that. But hit them up, ask them questions, man, and get the info, get the knowledge that you need. AJ, I'll let you go ahead and take us out what we got going for this week, man.
Yeah, so for this week, y'all, it's not a lot, but I want y'all just to be careful. It is a short trading week this week. Keep in mind the market is closed on Friday, getting ready for the Christmas holiday on Saturday. So you might see some low volume. So just make sure you stay, aware of what's going on and make sure you follow price. We do have earnings reporting. We got Nike and my baby Micron reporting on Monday. So that's going to be interesting. Keep in mind the Omicron variant is still out there and alive and kicking. So I think they said President Biden is supposed to be speaking on that on Tuesday. So you might see some volatility there as well. So just make sure you're paying attention, keep your head on a swivel. PCE, I want to say price index data. That's coming out also on Wednesday. So for those who don't know, that's simply just measuring the change in price of goods, right? But that it's excluding food and energy. So, and that's also by the consumer too. So you want to make sure you're paying attention to some of the economics that's going on as well. But most importantly, it is a short week. So when you're trading those little short terms that some of y'all like to do, make sure you're being careful. But other than that, just make sure you keep studying and enjoy your weekend this weekend and enjoy your family. Happy holidays to you all.
That is a fact. Appreciate you, AJ.
Have a good one, guys.
Yeah, it is a short week, so make sure y'all be mindful of that. Just going forward, we are gonna have a supplemental Sunday next week, the day after Christmas. It's gonna be going over economics and the business cycle. So if you struggle in that area, make sure you tune in. We do got 2 guys that know their stuff. You feel me? So make sure y'all tap into that. The week after that, January 2nd, we're going to have another economic segment. So one of them is going to be the business cycle, inflation, how that affects the markets. The week after that is going to be like GDP, CPI, PPI, PMI. We're going to have somebody go over all of that. And then we got some technicals, we got some fundamentals, we got some Web 3.0, ESG, buying and selling covered calls and puts, We're gonna go over that too. So we got a lot coming up for y'all, man. So make sure y'all keep tuning in every Sunday. I do not know for sure when Mark and Jolene is going to come back. I'm not putting my stamp on that. You know, I'm letting them do their thing, get their toes in the sand, get all that out. So when they come back, it's time to work. You feel me? It's time to work. So don't be bothering them too much. They done gave us almost 2 years worth of content. So it's enough content to go back and rewatch some of them episodes if you have to. And you know, let's just bounce off each other for real, because they created this community so we could end up doing, you know, the legwork that they don't have. You feel me? To be better than them. So it's gonna take people like Joe, it's gonna take people like James, it's gonna take people like AJ, you feel me? Even when her braids is out, you feel me? She still got enough info up there where that don't even But nah, we gonna let y'all get back to y'all families, man. Make sure y'all have a happy holidays. You feel me? Don't drink too much. Don't cut up at the spades table too much. Make sure you get them kids at least one thing off their list. Don't just get them what you think they want. Get them at least one thing that they really, really wanted. You feel me? If you need some assistance, ask somebody. You never know. Santa might be a Instagram DM away. I done gave out a couple things this Christmas. You feel me? Just off the strength. But we definitely appreciate y'all tapping in, man. Y'all have a good one.
Peace and love, y'all.